And this is Dave White sitting in for Tom O'Brien for the first 30 minutes. He will be back, and he had a little business to take care of. I always wonder, it's hard enough for me to get to my own show, much less running a full business at the same time. And I guess he's chewing gum and walking and twirling some plates, but he will be back in about 30 minutes. So anyway, what do we have going on? S&P up 23.5 points. Volume has tailed off, although it was fairly strong this morning. Now just printing 2.5 billion shares on the New York Consolidated Tape. That compares to, 3.8, 4.2 billion the last few days. So a light volume pop back up. And the question is whether this is going to stick. In the previous hour of my show, I went through, I don't know, probably 10 or 15 stocks. And a lot of stocks, especially the mid-tier stocks and the smaller caps, have been down at these lows and got a big boost out of here today. But one thing that they didn't get was a lot of love. They got some price movement. They didn't get a lot of volume. So we're going to be keeping an eye on that. Of course, when we look at basically a market that is having narrower and narrower leadership, basically everybody piling back into the Dow, everybody piling back into some of these other, probably the top 5 NASDAQ stocks except Apple. As we look at the commodities, those are where we're seeing a great deal of the action today. Gold off at $22.50 at 1192.70. Certainly looks to me like it's going to hit 1180 probably on Monday or Tuesday. And I could see, or what I would like to see, I know this is not a Tom O'Brien thing, but what I like to see in the futures markets especially is a washout. And if you've listened to my show, I talked about it for a while. I'm normally thinking about a washout, about a 2-time loss in the margin of a futures account. In gold, that's about $45. So if you wanted to have a 200% loss on gold, that would take you down to about probably about 1120 on gold. And, could we see something with this? Well, we certainly could, because we've got the dollar index literally ripping the face off of the markets. That's dollar index is up at $86.68, up $1.06. That is absolutely huge in the scheme of things. And, of course, we've got a trading contest going on, giving away $10,000. And I think we've got the leaderboard up, although I cannot see it. But I think we've had some multiple winners on the show. So I guess we're going to call them later on in probably the second hour of Tom O'Brien Show. And we'll get on with them and give them some cash. With no risk. There was no risk. All they had to do was sign up. I begged you guys to sign up. Did you sign up? If not, you cannot blame me. Anyway, what else do we have going on today? It certainly is a day where we've seen probably enough rock and roll. I said it's a little bit of country and a little bit of rock and roll. And we're trying to figure out which one it is. Is it an up market or a down market? I am still on the camp that this dollar index move is going to send a shock through the system. We saw Germany off about 2% today, and we keep seeing a market that thinks that nothing is going to really move this market. But it's hard for me to see that we wouldn't see at least earnings down, especially in these high exporter multinational companies, that we wouldn't see these, take 10, 15% off earnings in the next quarter for what, a 9% move in the dollar? Some of that's going to be hedged, but my guess is that they didn't hedge any kind of 9% move or 8% move in a dollar index over this last quarter. Some people guiding down, maybe they saw it coming. My guess is they may have hedged half of that, but they didn't hedge all of it in these multinationals, and that is going to be problematic. We look at platinum off $42 today, $14.26, $1,226.65. These monitors are just a little bit too far away from me. But as we look at that, VIX basically kissing 18 yesterday. Everybody dived in, off 10% today at 1450, and just like it didn't happen. It's like Service Master, those ads. Just like it didn't happen. Well, it's going to take a while to roll the VIX back out. But again, it is going to be problematic, I think, come Monday to see what happens in Germany. And we've got elections coming up across the world. In Brazil, I think, next week. There's a lot of questions on whether or not they won't start nationalizing a lot of the energy companies down there, and kind of the history of the current president, who's now looking at becoming president yet again. But in this segment of her reign, that she's going to go a lot more forward to the Banana Republic version of governments in South America. And, of course, we've got Argentina in free fall. A lot of these third world countries really starting to get hit. I watch the EDZ a lot. This is an ETF of countries, third world countries, let's put it that way. And, of course, this is the bear version of this. A little bit of pullback today. They did it. It basically did everything it should. It went and filled this big gap that happened back on the 12th of May. If you're watching on Tiger TV, you should see it. But basically, this thing kind of gapped down 772,000 shares back on the 12th of May. And it came down with all the kind of volume in the world that you want to see. And I don't know what else you can say out here. We do have a call, so we'll go to Lou in Nashua. How are you doing today, Lou? Oh, actually, Mike in Toronto first. Can we go to Mike in Toronto?
Okay.
There's too many people lined up here. I'm sorry. Go ahead, Mike.
Yeah, hi. Thanks for taking my call. Using your software there, could you chart the DZZ?
Okay.
So, you can tell me if you can generate any price projections for it.
Well, you could do basically a retracement on it. I think that if you were, are you talking about an ABC up? Because
yeah,
it isn't one as far as I can tell. The pullback from April 14th would have broken the ABC pattern. Mm-hmm. That April 14th day back there was about a 50% movement of the March 14th to April 1st. Mm-hmm. And I did a lot of work when I was writing the software about what it does and what makes ABCs. And what you could probably say is that this is the first leg of a possible ABC. What you would be looking for is the retracement of this $5.95 low from July 10th up to this high here today at $4.96, and look for some kind of pullback to buy on this thing. And maybe on that pullback you've got an ABC up, right? Mm-hmm. But I don't see anything. If you did a 50% retracement of a move, to me, that can't be the starting point of an ABC. That was the move right there that you can't ignore, that April 14th pullback of 50%. Now, you can say that that was the ABC, right? With the March 14th low being A, the April 1st being B, the April 14th being the C, and this June 3rd point being the D point, right? And that was the completion of that ABC. But basically, you're starting all over again because you went back below even the previous April 14th low. So maybe you could say this is an ABC, but, I mean, you're really going to have to reset this thing to get the next one. So I'd be looking at the next pullback. You want to hang on through the break?
Sure.
Okay, we'll be back. We've got Lou from Nashua sitting on the warm-up circle out there and warming up on the batter's bench. We'll talk to him when we come back. And Tom O'Brien will be back at the bottom of the hour.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, this is Dave White sitting in for Tom O'Brien for just the first 30 minutes. He'll be back here in just a scant 9 minutes and back after the break at the bottom of the hour. In the meantime, we've got Mike.
Yeah.
Hopefully still on the line.
Still there.
And wanted to look at Royal Gold.
Yeah, RGLD.
You're right. One of the few that just going sideways out here. It is a different stock than most in the fact that it only participates in the royalties of other mines, whatever they sell. So what's your question on this one?
Well, basically, it's normally a benchmark for where gold is heading, okay? So,
right.
Tom has mentioned that numerous times, and I've started to follow this company around December. I had a great move at the bottom of December around Boxing Day into March. So I was just wondering, is this just another consolidation phase before another leg down, or what is your software showing?
This thing's going sideways, probably because it is probably going to be problematic for this to be a good divining rod for the price of gold in the way future. Because all they do is participate in the winning and not the losing, this is going to be kind of tough. Basically, it looks like they've probably hedged some position, so it doesn't matter. They're not going to lose any more money. But it isn't like a mine that has to be open and pumped out every day with expenses and everything else going on. So I think what you have here is divergence in the fact that these guys are probably hedged the downside to any move in gold, and since they don't have a real company and don't have mines and holes and workers that have to be paid and everything else, they aren't going to be going down like the rest of the miners out there, right?
Uh-huh.
Even if you hedge some position as a gold mine, you still have all those expenses going on, and I know how many gold mines out there, just a tremendous expense it is just to keep the water out of them from filling them up, right?
Yeah.
So this one's different in the fact that it probably, now my guess is you'd want to look into it and find out what kind of hedges that are in it. And what you're going to find out is eventually those hedges will run out. So if gold stays lower, this thing will crack. But for the meantime, it's probably found as long, it may have a window of 3 months or so, or maybe even longer, where this thing will not track to the price of gold because they've hedged that bottom out, and they don't have any real expenses other than just showing up to the office every day and watching those checks come in from the other gold companies that they've got royalties on.
That's true.
So.
Okay, that's a great perspective. Thank you very much.
Okay, Lou hung up, didn't have time. He was going to ask a question about the S&P. I don't know what it is, so we'll get back to some of these other issues out here. But certainly we are back up to a level that is going to give us a lot of quandaries. I would not be surprised to see a market that moves extremely heavy on Monday again. And I think volatility is going to bring volatility. And as much as they want to squash it out, it's almost impossible for me to believe that a dollar move in the dollar index today is not going to bring repercussions and echoes that will last the rest of the year. Of course, most of those are exporters. And what happens when the dollar gains ground? They make less money. Now, mostly they'll take a small move, and each quarter they'll, of course, hedge that move. My guess is that nobody was expecting a move, which I think is going to go to about $88. I mean, we blew right through it. Normally when these moves in the dollar continue like this, they just don't stop until they get to some kind of ultra huge resistance level, which will be probably around that $88 level on the dollar index. So another $1.50 to go. Now, numbers were pretty good for the jobs numbers this morning. There are some dark clouds around it that you could bring up. But the other thing that I think is it makes it incredibly hard for the Fed to continue not to raise rates. Now, not everybody will agree about that, but my guess is the heat from today on will be on the Fed. We've gone from 2 to 3 dissenters. My guess is that the next route will have 4 or 5 dissenters, and they'll want to get in front of this move, and potential move, let me put it that way, and try to get interest rates moving back higher before we end up with a problem of deflation, and kind of almost inverse in what you would think. Now, we had a comment in the den from one of our senior traders. It's a pretty good idea. And that is, everything moved and went to hell in a handbasket in Europe. So, of course, everybody's out buying dollars today to buy treasuries in the United States, where you can still make at least a little money. So, does this last? My guess is probably yes. I think this is the first day of this. We're probably going to see some more movement. We certainly have the problem with PIMCO and moving a lot of other bonds around. Like they said, in confusion, there is profit. and there is a great deal of confusion going on. Now, some of the stocks, when people have called into my show last few days, you wanted to be looking at. And, of course, everybody wanted to short Tesla. I said, no. I said, nay. I said, I will empty my nostrils in your general direction if you short Tesla. And that is pretty much a losing proposition. But I did say that we might have a good hit out here if this thing could go back up to maybe the 270 level. Now, huge move in the S&P today. Are we getting that huge move in Tesla? The answer is no. I think that this could basically crawl back up to the October 9th frame. And it would be, what would you say? Yeah, I'm thinking that basically going to roll out a new product and a new car. The speculation right now is it's going to be a motor on every wheel. And that may bring the horsepower of the car up. They're already blindingly fast because they don't have transmissions. They just have electric engines. And pretty interesting idea, but they're looking like they're going to make a supercar. Probably only go 100 miles, but boy, it may rip the tires off of it and be interesting. But they're talking about that and some other new inventions or discussions that they'll have. But I think this is kind of like Apple. You're probably going to see some kind of peak right around that October 9th date. We've got others in this. I didn't like going short the IBB either, mostly because if you look at the stocks underneath it, they have a lot of short interest also. But I think that you're getting awful close for a move back here. Now, today, nice gap up, lighter volume. Just not really pulling a great deal into this, though. You had some big volume down days, but not enough of the movement. To me, it looks like maybe you're going to have a few days out here of short covering for people who got short maybe just a little early on the IBB. And you want to be watching this very closely in the next couple of days. I had been thinking we might get into a low by next Wednesday. Right now, I'm thinking that we probably may, see a lot of action on Monday. I'm betting to the downside. And, I look at the New York Consolidated Tape, which is probably a little bit more than in volume than Tom talks about. It is all shares traded no matter where they're at. Like I said, I wanted to be seeing something like 3.8, 4.2 billion shares today, 2.7 so far. We're going to come in probably 25% light on volume. It is a Friday, so maybe volume comes back in Monday. Anyway, we'll be back in a minute with Tom O'Brien.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Tom O'Brien will be back here in a minute, but he's still on fire. They're still putting him out, so he'll be back in a minute. We're going to go to Lou in Nashua. How you doing today, Lou? Oh, and gone again. Okay. He must have a bad phone or on fire also. So what else do we have going on here? I wanted to look at the S&P. I'm not exactly sure what his question was, but certainly we're just back up to the trend line down. So I don't see a great deal out here to freak me out. We put on some positions in my daily and weekly newsletters that's still going to be, we're still in the ball game and making money. It would have been nice if this just went straight down. And to me, this is actually building a case for a bigger bear case than it is a bigger bull case. I would have loved to seen this market go down to 1905 on the S&P cash with a lighter volume and make a low in it, but it hasn't cooperated as of yet. So other things going on that we wanted to take a look at some of these other issues that are going on. So let's take a look. We talked about Tesla. We talked about IBB. So what else is going on out here? I mean, I think everything's being swamped by this dollar news. I'm trying to see if there's anything else out here really moving of interest. And we're going to start looking at some of these other ones. MYL. Let's take a quick look at that. MYL. Okay. Raised Q3 and fiscal year 14 guidance was at 8% today. Mylan. Nice pop. Of course, you had a lot of action yesterday in this thing. This is a whippy little dude. Did test its previous low from August 13th on lighter volume. You had 8.7 million shares on that August 13th low. On the September 30th low, 7.1 million shares. So enough to be low. You had kind of a wacky day yesterday. I don't know if that's a bad tick. Certainly today you've got volume and a sign of strength out here. We had somebody calling about this stock, which is MBLY. And boy, talk about another gappy little stock. We were talking about kind of hard to actually figure out what goes on with Mobileye because it is such a recent IPO. The lockup date is also coming. I'm trying to remember what I said the lockup date was on this thing. I think it was a little bit soon. Anyway, bouncing around, but one of the things that you need to look about this stock is it is called a sliver deal, and that is when a very small percentage of the shares are out the float to trade, and it makes these things extremely gappy and extremely huge movers because there aren't enough shares to float. Now, this thing up on a gap and a little bit of volume. But again, extremely hard to trade. Now, what we do know, though, is this has busted the previous high at $58.61 from September 9th. It looks like it's going to close under that low, and it's going to close under that low with maybe 40% light volume. So, again, what you should have had here is a volume and a close back above $58.61. And let's see what else. Basically, CNBC talking it up today, and Tesla talking about momentum stocks just in general running. COV is another stock that is moving today, up 5%. Medtronic reaffirmed its commitment to COV acquisition by announcing updated financing plans. So this thing's back up and for sale. Back up to the nice big gap up on June 16th when they were talking about, and the news came out about them getting bought out, and back up to that level now. So probably a few people looking at that. Of course, we've got a lot of these gold companies out here that are sucking wind today. CG among them, off almost 5% to, well, was off 5%. Is that CG? Oh, GC. Am I wrong on this? Oh, GG. Again. Okay. Gold Corp down, and you needed less than 7.9 million shares for the June 3rd low at $22.68. Just a shy under 8 million shares on that June 3rd low. You wanted to see that attacked with a lighter volume. It looks like we're probably going to at least match it before the end of the day. 7.2 million shares back into that low. That means at least consolidation or a sideways move for a while. Rig, of course, crude down fairly extensively today. And when we look at crude, certainly one of these stocks that just keeps going lower with the price of crude. Crude off today, where is that little goomer? Off $1.35, solidly under $90 at $89.66 for the West Texas crude. And, of course, setting up probably a trading range between 90 and 87, I think, for next week. And the way this thing has moved and the way it wound up bouncing between 94 and 90 over the last few weeks, I think it's got more than enough juice to bust at least for a little while through that $87 level. These commodities all looking rather poor. Of course, gold off today, that $22.70 as we speak at $11.92. My guess coming back down And Lou apparently has been frozen and became solid, is what my IM says. He says at least his signal is back and solid. How you doing today, Lou?
Good. How are you doing?
Good. What's your question on the S&Ps?
I was contemplating shorting the E-mini via a put.
Okay.
And just wondering if my timing is right. Or
I was kind of upset that I only had about 4 positions in my newsletter this morning. I used today to flush that out, and I'm 100% short now. So I think why I shorted a little higher of some of the other stuff and individual stocks, I think this is your last chance out here. This thing's either going back up to the top or going back down to the bottom. And I'm betting on the bottom. If you are, I think Monday you're going to have your answer, whether you're right or wrong. I always love these trades when you have your back against the wall and you know really quickly whether you're going to win or lose. And I think you're going to know that on Monday. This thing is either going to start pulling back on Monday, or you're going to see a gap up and you're going to see energy in the next 2 days. So next 2 days of trading, Monday and Tuesday, are going to tell you a lot. Right now, I continue to watch this volume, and it is telling me from a variety of sources. I didn't look at the Qs yet. Let's take a quick look at those. But we're going to be light volume on the Qs out here. Yesterday, volume on the Qs was 54.5 million shares. Today, we've got 34.9 million shares on the Qs. So I certainly see a great deal out here that would say that you could pull the trigger and look for at least a test of yesterday's low that had all the volume. So that's the small term. The long term, it's hard for me not to see this dollar index really ripping and taking the market with it. Unless this dollar really pulls back on Monday, I think you're going to have headwinds into the market that we haven't seen for a long time.
Right, and also Larry's talking about Mercury in retrograde.
Well, I'm not much one of those guys, but I know that there's many ways to skin a cat. So I don't know about any retrograde or Mercury, but I do know what the charts are telling me, and they would agree with the planetary alignments as we look.
Right. So, and what would your target be?
I'm looking for 1905 on the S&P cash. I think that's everything that I have shows that that's kind of where we're looking for the first sign of support if this market fails. And if you listen to my show in the previous hour, I've probably got 200 or 300 stocks that are in the small to medium cap that have already failed. They're down at the lows with light volume, and today they started bouncing and had no volume and not a lot of movement. A couple of them did, but I'd say 80% of them haven't. And that gives me 2 more days for that volume to come in some kind of movement. And to me, if they don't really move, that certainly is problematic.
Right. Okay.
So I think you're going to have a good answer on Monday or Tuesday. We're going to see whether these stocks can bounce even with light volume. But so far, the dog has not barked, if you've listened to my shows this week.
Right. Well, I'm going to take a stab at the short.
Just, I think you're going to know real quick, so you don't need to give it a lot of room.
Okay, great. Thank you.
Other stocks are moving out here just before the break. FireEye, F-E-Y-E, downgraded. Of course, not a bad company. And, of course, my theory on this stock and why it's done poorly is it's very tough to sell software that makes the CEO responsible for these things, and they continue to have it. But boy, it's got volume down here compared to the previous lows. It looks to me like that 25.58 is open and going to get tested. So, Tom, I see him in the bullpen. He will be back for this next segment. Sorry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Thanks, Dave. Appreciate it, man. Market-wise out here, folks, let's take a look at it. We get a bounce. There's no doubt about that. You get a bounce, and guess what? This bounce is on late volume, folks, okay? If we go take a look at the SPY first, what you're going to see out here is this. The SPY, we're going to do maybe about 110 million shares. You've done 101 thus far. We're at 196.77. Yeah, I can get up to 198.30. No big deal there. We go to the 3 Qs, the NDX 100, and what you're going to have with the NDX 100 is this, is that the NDX 100 right now is at, the Qs are at 98.38. They're doing 37 million right now. They'll end up doing maybe 41. That's going into 58. Now, what we do have, and this is where, this is going to be wild watching how this whole thing shakes out. If you go to the SPY, and we're at 196.73, what you're going to see on a long-term basis is that you basically broke a channel line, you broke it with conviction, and it looks like it's going to go back inside the line. Yeah, it is. Okay, so where we are right now, this is what you have, is that you broke the channel line, and this channel line, folks, is a monster. It goes all the way back to 2012, and that's 1360 S&P, which is insane.
It is.
Okay? There's no doubt. Now, we have broken this, and you broke it with conviction. You know, so thus far, folks, we've done 664 million shares. Your last swing out here, which, in fact, it was going into, we had 592 million. But it is important, bottom line is if you're going to get to lower price, that you'd have to close underneath that line also. And it looks thus far that we're not going to do that. Thus far, the ballpark trend on that line is 195.12, and right now you're at 196.79. Now, what does that mean in a larger context? It means that it basically has put a hole in that line. And you can see, though, that line is held pretty good.
It has. Now, on the shorter term, when we look at the daily,
yes,
it really hasn't broken back up. If you're going to do trend lines, it hasn't really broken above that trend line back down either. So I think Monday's going to be a big day for us, isn't it?
I hope Monday it bounces again. I do. And this is why, folks, okay? Because what happens is that the aspect of the downdraft versus the updraft is in place, number one. And this downdraft started out, it's a 94-point S&P downdraft. So the best place to put a trade on, if I go over to the SPX, when I say the best place to put a trade on, what I mean specifically is that where your back is against the wall would be, you're at 1968, it would be an SPX at 1978. Because what you would be doing there is that that's where it broke down from, and it'd be just somewhere into that area. You could use the swing point. Yeah, you could use the swing point of 1985, actually, which is really a lot more.
Yep.
You know, but what happens there is that then you're getting a clue. Are you going to basically have a successful test of that level, or is it going to fail? And the ultimate would be, if you're bearish, the ultimate would be that you get up on the SPY into 198.30. You get above it, you have lighter volume. And see, what it was really cool here is this, is that the 30th, you only had 131 million. So you'd want to get up there with like 100 million and fail. And then you got some action, man. You know.
What about the dollar index, if you're talking action?
Talking action, man. King Dollar is King Dollar in an extraordinary way. King Dollar, folks, had 54,000 contracts, up 1,125 ticks. I've probably seen this before, but I don't remember seeing an expansion.
This is kind of like the Dow moving 1,000 points.
Well, it's just amazing.
Yeah.
And guess what, folks? Okay, it's not done because this baby, your swing point, it's right at your swing point right now, meaning you're only a point underneath it. DX1, and this is the. This is. If you take a look at the DX1. This is a continuous contract, and we put this back. What you're going to see is that this has been building cause to get up to these swings
we are at the swings right now, and the top of that swing is 89.71. The first swing is 88.80, and you're at 86. It's like, you know what? That's not going to stop there.
The question I have, and I'm kind of grasping for the answer, is if I was a multinational,
right,
I probably would have hedged at least some risk to higher dollar. But I don't think I would have risked probably much over 84. I think I would have said I would have put on a lot, but to me, probably everything over 84 really starts hitting the bottom line of multinationals.
There's no doubt that no matter what Dave is saying, no matter what type of hedge you had on the dollar,
it wasn't big enough.
It wasn't big enough.
We need a bigger boat, as they said in the Jaws.
The dollar, folks, okay, and in the course of 6 months, has just gone from 78 to 86. You know, so the bottom line is that it's a big move. Now, what you also have, and this is where this is going to be a huge heads up, you know, we get up to those levels, you start backing off, you build some cars. That's the smaller issue. The larger issue is the dollar going to break out over the 89 level? You break out over the 89 level, guess what? You're going to 121 again.
Now, normally, or in the past, we've seen the Fed come in and kind of monkey in the Treasury, kind of monkey around. I haven't heard a peep, so it doesn't. I'm not really expecting, or at least haven't seen anybody really come in here and try to throw some cold water on it for a few days.
Well, watch this. This is the correlation goes like this. You know, when we always heard, remember it was John Snow? John Snow was the Treasury Secretary, folks, when it'd always be yapping, we believe in a strong dollar. And that's when the dollar went from 122 down to 70. Every single time we believe in a strong dollar, okay? So bottom line, we saw what was going on then. There's no conversation really now about it. You'll hear more conversations and people yapping about it, corporations yapping about it in general. And then you'll find out the hypocrisy inside the system in general, that they say they want a strong dollar, but guess what? They don't want a strong dollar. Now, in that context, I expect that the strong dollar is going to stay there. Why? Because our bonds. Now, if you watch these bonds, and if in fact you watch the bonds right now, the 30-year bond is up 8 ticks right now. And if you keep your eye on these bonds, that's saying two different things. That's saying, number one, this market's going to go south, and this is a counter-trend bounce. Number two, what it's saying, though, is that the amount of money that's coming in the U.S. is extraordinary. Okay? And the amount of money going after bonds. So watch this. You win both ways.
Now, when you buy a bond, it isn't normally to take it and sell it the next day.
No, it's not. No,
so if you're buying dollars,
right,
you're buying and put them into treasuries.
Right.
That's taking dollars out, making them more valuable.
Right.
Putting it up. That doesn't change on a dime.
No, and watch this. This is what's amazing. If I put the rates up across the world, right, they're still low, but guess what? On currency risk, these people have gotten smoked. You stay right there, folks. Dave and I are going to be coming right back. Dow Industrial's up 211, Nasdaq 48, S&P's 22. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF Friday. It's a TGIF. Let's make it a great one. Let's take a look at one of our quotes. This is by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. Market-wise, let's take a look at it out here. We ended Dow Industrials up 208, Nasdaq up 45, S&P's up 21, gold contract down $22, traded at $1,192 an ounce. Silver off 20 cents at $16.84 an ounce. Platinum down 42 bucks at $1,225 an ounce. Platinum's almost the same price of gold, which is absolutely amazing. Copper, $3 a pound. Light sweet crude got smoked once again, down $1.30 at $89.71. That's going to 85 bucks. Bonds, the ever-ready bond market, folks, refuses to back down. 10-year bond down 4 ticks at 125.06. 30-year bond up 10 ticks at 139.09. And King Dollar up 1,100 ticks, trading out at 86.79. The euro down 156 at 125.13, and the yen up 133 at 109.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You have a cash S&P up here at 1969. You came down from the highs of the 19th of September. That high was 2019. You get into a price point yesterday of 1926. So what we have there, you get about a 94-point A to B structure. Today, you get a bounce going, and then the NYSE had some volume. It was 800 million versus 800 million. You can expect that this bounce will get you up somewhere about the 1985 level. Inside the SPY, you want to look at that correlation, volume-wise, price-wise. You did 114 million shares. That's going into 177 million. SPY out here is at this 196.52. And, you know, the bottom line, SPY can make it up to 198.50, which would be another $2, which would be another huge day, which will give the bulls and the bears both something to yap about. NASDAQ Composite. What do we have with the composite? What you have with the composite is this. Composite goes up $45, and inside the percentage-wise inside these indices, folks, what you have is this. The Dow is up 1.2%, S&P is 1.2%, NASDAQ 1. And that's kind of unusual because the NASDAQ likes to lead. NASDAQ also had 1.7 billion. 1.7 billion was going against 2.2.
Yeah.
So the NASDAQ's going to be the number, man.
If you look at the Qs, same thing, you're going to see real light volume. At least it was at 345.
No, absolutely. So what you have is this. The composite up $45, 44.75. What I expect you can get up there, that baby can get up to 45, 46, which is quite a way. The 3 Qs, the NDX 100, using the 3 Qs. 3 Qs today go up, come on, baby. Where is she? There she is. Up 96 cents. You're at 98.17. You do 41 million shares. That's going into 58. And, you know, this is basically, this little baby, the NDX can get up to this 99.30 market. That's basically another $1 up. Gold contract. Let's take a look at gold. They got gold below those lows out here. Gold goes down $23 today. Does it with 178,000 contracts, and that's a problem. No two ways about that. You came into the 186,000. If it had more, another 10,000 contracts, you could make the case that it's an ABC structure on the way down, and that would be one monster ABC structure on the way down.
It would.
If we go over to the GLD and you take a look at the correlation, if you're not in the futures market, the GLD right now is at 114.61, and what that is doing is going right into the lows that were generated out here, which is 114.68. Now, you're below it. When you're below it, that's a problem. We did, let's see, let me put the weekly up, because the weekly will give you an indication. Okay, so at 114.68, we did 109 million shares, and what we did here this week, we did 38 million.
Is there any chance that you would see somebody like a Paulson or other big holders have to be washed out here and have to start selling?
No, I
don't
doubt
think so?
it. I doubt it. Because what you have is that Paulson basically has brought his position back on the downdraft. Figure the first low in gold, folks, was June of last year. He, right now, he owns almost 4% of the GLD. He had owned at one point like 12%. So he has already brought that position back and brought it back pretty dramatically. Bond market. We go over to the bond market. We take a look at bonds. Now, this market is just amazing. So the 10-year bond, folks, in that aspect today, rejected lower price, did 1.7 million contracts, and guess what? That's also lower volume, because when we went topside, it had done 1.9 million. That's an ABC up. And that ABC up looks like we'll find out how it goes attacks the 126.12 level. But the way that's set up, it wants to take it out. Your A point on this is the 123.16, and your B point up here is 125.23. Yeah, it's big, man. It's 2 points. So that would get you to 126.26. So let's say that's almost 127. Yeah, that's right over the highs.
What did the yield on the 10-year do?
The yield on the 10-year right now, we are at 2.438. The 30-year, you take a look at the 30-year, and the 30-year right now is trading out. The 30-year is strong like bull. It's amazing, actually. So the 30-year right now actually went positive. rejected 138.11, closed at 139.10, and this is a monster too. The 8 point on this is 135.13, and the B is 140. Oh my God! So that's almost 4.5 points, which would get you to 144. And that's over the highs of 140. So it's a big number. That's also basically saying that, guess what? This is a bounce. So the correlation and the harmony inside that is saying to me that this is a bounce in the marketplace. King Dollar. Let's go over to King Dollar. King Dollar is just absolutely amazing. King Dollar was screaming for a higher price, got higher price, 55,000 contracts, and King Dollar's only gone one way, and that's up. When you're this close to a swing point, as we said, when you're looking at King Dollar, what I expect you're going to see is that it's going to go up into that swing and go for the swing. The swing that we're talking about, folks, the last swing high was in 2010. Imagine we're in 2014 too, right? Yep. So that high is 88.80. The high before that was 89.10, and that was in 2009. So bottom line, you're going to see inside the currency markets huge fluctuations, and you're also seeing volatility in spades. Now, in that context, okay, this is pretty cool in that context, actually, because I want to welcome back Everbank as one of our sponsors at TFNN. And, they have a lot of different products, folks. And one of the products that they have that is open until October 15th, if you come over to our website at TFNN, you're going to see the Everbank banner on the right-hand side. It's called the Market Safe BRICS CD. And what this is, and if you're familiar with Everbank, Everbank is very creative in their product line. And in this particular case, you can have a 3-year CD. They call it the Market Safe BRICS product. And what that product is this. If you believe that good things are in the horizon in the emerging markets, and that those emerging markets would end up being Brazil, Russia, India, China, and South Africa, you can get a 3-year CD. Now, this is how this works, which is pretty neat. It's particularly neat because the dollar has gone so dramatically higher, and these other currencies, a lot of these currencies have gone lower. You can open this from now until October 15th. You need $1,500 to open it. The key here, that's why they say it's a market-safe BRICS CD product, that your principal is 100% protected. There's no monthly account fee. It's an FDIC insured product. It's IRA eligible. And what does happen, though, if those currencies go up, well, you get the upside, and you're protected on the downside. And what is intriguing, of course, is that because of the way that the dollar ran topside, this is a decent time to take a look at it. If you'd like more information about it, you can call their trading desk. It's 855-750-4051. That's 855-750-4051. Or just hit the banner on the front page of TFNN. David and I are coming right back, folks. You stay right there. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The diagnostic box spread analyzer helps you easily identify the best box on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. And, coming across the tape here, Marriott International was fined $600,000 by the Federal Communications Commission for blocking hotel customers from connecting to the Internet on their personal Wi-Fi networks in order to force them to pay for the hotel's network. Marriott employees blocked mobile hotspots at the Gaylord Resort and Convention Center, while at the same time charging consumers, small businesses, and exhibitors as much as $1,000 per device in order to use the Marriott Wi-Fi network. The reason I'm bringing this up, folks, okay, personally, at TFNN, we had this many times, okay? I have a Wi-Fi card that I have always in my pocket, no matter where I go. And when we do the workshops, okay, the bottom line is that it used to be like, you got to be kidding me, man, you know?
So you couldn't use your 4G phone because they were blocking the 4G part of it, so you could get that?
It's really when we're doing workshops.
Just the Wi-Fi part.
But what would end up happening is that, let's say, even on my own computer, if I'm trading, they'd block them, so you'd have to use their... I didn't care about that part, meaning that give them $15 for the day. Yeah. Giving them $1,000 for 2 hours, which I've had to do many times, of 4 hours, that was a deal. And this is almost just like when the banks get fined. $600,000 is nothing. I know myself, we probably gave...
It probably is compared to what they made off the Wi-Fi fees.
No, we've given them like $12,000, I bet. You know what I mean? Bottom line, it's absolutely insane. And it was, and that's right. And as Terry says, one of our, that's good. We'll have to get after the Sand Pro. That's right. That's exactly what happened down the Sand Pro when we were doing it, too. Yes, it was. So there's a lot more than the Marriott that's doing it. But that happened in the Sand Pro.
Now, there was a guy that was arrested, and he's probably going to face jail time, that was driving between Tampa and Orlando every day.
Okay.
And he was so mad at people texting and doing everything on the phone, he bought a jammer and jammed everything in a mile.
Really?
Yes. And they finally, they just waited for him to come by with his jammer with one of the trucks that can see the signal for jamming, and found him. But this guy was so mad at everybody running him off the road while they were texting on the phone, they bought a jammer. But that's a big deal to be jamming any kind of that stuff.
Well, particularly because, if someone has an emergency, that's a big problem.
Right, it certainly is.
So, folks, don't forget, Dave has a great program every trading day right here at TFNN. You just go to 1 to 2 Eastern Standard Time. And, of course, this week we had the Nadex $10,000 giveaway program contest. We will have that winner coming this Monday. We'll know that winner. In fact, we'll know the winner in another couple hours. We do appreciate everyone that was out there participating, and it was a great contest. And we had some, as of today, folks, the leaderboard, it goes from $9,000 in profits, not just in their account, in profits, number 10 up to $49,000. So we'll see how that shakes out. I do expect you're going to see some fluctuations because of the volatility. Inside the Tech, and of course, Dave has a great newsletter, the Tech Inside. You can test drive it by coming over to our website at TFNN. You go into newsletters, investment newsletters, the Tech Insider. So encryption and the NSA we're looking at here.
Right. Now, J.P. Morgan let it known that customers, 72 million customers, apparently it's actually a little less than that.
68 million, right.
Yeah, whatever it was. But they got hacked. They got the customers' data. Now, they're kind of fishing around for what they really got. They said all they got was names and phone numbers and addresses, which is plenty already, because that if someone has an account at J.P. Morgan, they probably have some juice, right?
They do.
So now you got your happy hunting ground. Well, they did get more data than that, at least some reports show that, but they're saying it was encrypted. Now, I would like to go back into the whole NSA encryption thing and explain what encryption actually is and where the problem comes in when everybody thinks that because it's encrypted, it's safe.
Okay.
And this actually goes back to the late 90s when this all started. But for a basic view of encryption, just so everybody knows, I can explain it fairly easily, but it is incredibly technically hard, right? But you can get an idea how it works. If you were in the military, they said 1,400 hours, right? That's what time?
2 o'clock, right.
Okay. It's called clock math.
Okay.
Okay. Now, the only thing is what that number is before you start back over for the second half of the day, right?
Yes.
That number could be anything. It could be 5, could be 7. But pretty much the basis of all cryptography is that. You start off with a number. But, of course, I'm not going to tell you that number, and the numbers really count above that number, right? So the clock could have 17 hours on it, so 18 hours is really 1 o'clock.
Right. Okay.
Now, they use much, much larger numbers than that.
Sure.
In fact, the number here I'm going to show you on the screen is the number that the NIST, the organization that tells you how to protect your data in the United States, tells you. But that's the number that they use, right?
Yeah.
And if you're home in your cars, I'm looking at lines of 32 digits that go 4 lines long, and we're in the trillions and trillions of Googleplexes of numbers that they start out. Now, for reasons I won't get into, you want to use a prime number, and the first one you might want to use, if you were doing this just on paper, was 17, a prime number.
Okay.
That makes it a lot easier to make things look random down the line. So, as we actually talk about this whole thing, all of encryption pretty much is around a thing called an elliptic curve. And it's a math function. The function's really not that tough. If you took high school algebra, you could look at this function. But basically what you do is draw a line through this curve.
Yes.
and that gives you the inputs to go encrypt your data.
Sure.
Okay? So it kind of looks like if you're in your car, it looks like a chart made of like a baby bottle's nipple, right?
Right.
Kind of a little bulbish on the side, right? So you've got that. Now, when we get into it, what happened was there's an organization called NIST, N-I-S-T.
Okay.
They go to all the banks and they say, you've got to use this kind of security data.
Right.
You've got to use this kind of stuff. Now, well, what happened was the NSA kind of wandered on over, figured out how to give them and put some numbers in there, but really never told them why to use those particular numbers. Well, the thing was...
Those numbers were a backdoor in, right?
They were a backdoor in. Now, the problem, though, is that in 2007, these two guys that were pretty smart up in Sweden or Norway or something wrote this big paper, and they said, where'd these numbers come from that you told us to plug in to this formula? So the cat's out of the bag. Within about 6 months, everybody figured out that was the big, giant backdoor into all these...
So what you're saying is that that's where the hackers could get into all these accounts?
No, the NSA, because these formulas are so good that even if you bought a supercomputer, to figure them all out for just that specific number would take you a couple of years.
Okay.
So probably the NSA spent about $3 billion figuring a very tough backdoor in.
Okay.
Okay, but once everybody knew that it was a backdoor in, all they had to look at was that number and go back and do it themselves. My belief is that the Russians probably did that over the last, well, it was 2007, 2008. So probably these other big, large nation states have the ability to spend the time and effort to go back and backdoor that stuff.
But that's how they're doing it. That's how they're breaking into everything.
But Russians, all you need is one guy to leave from the KGB.
But that's my point, right?
Suddenly, suddenly it's out there. Now we're going to get into the reason why that they went after all the big companies in 2008 and 2009.
Dave White, Tom O'Brien, you stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. Get all of it right on your cell phone. TFNN.mobi. We're talking about encryption and the NSA. Okay, so we figured out how everyone can get into the computers now because the NSA put a backdoor in, and then, of course...
Right, but it's going to still take enough effort that it's going to take a nation state.
Sure.
But if you got somebody that worked at the KGB...
But you do. That's a no-brainer.
That leaves and goes over and wants to make some quick bucks with somebody...
Oh, just KGB, period.
Or maybe they're doing it in their spare time. But it is problematic. But the real reason that we started hearing all the yelling and screaming about the NSA was that they started going directly after these companies because they couldn't just stand in the corner and surreptitiously actually take the data and then decrypt it another day somewhere else, right? They had to actually get in and get the unencrypted data because between almost everybody there was... Like if you used Google now, you'll see it says HTTPS : not HTTP.
Okay.
That means it's a secure communication.
Yes.
There's a handoff between the two of them. They probably got involved in that and have weakened it, but at least it's encrypted to both sides,
sure.
Right? But now they've gone directly into the companies where they can read the data and the emails without even having to try to do that.
Sure.
But the whole idea was they got their hands caught in a cookie jar, and they really didn't have a plan B other than to directly go after all these companies that were holding the data. But there is no better answer out there. And, of course, since World War II, we've made our bones by making sure that we knew what everybody else was thinking and knowing. From the Germans to the Japanese, we broke all the codes and have been since then.
Right.
But we may be at the point where this is why the NSA is so sure they've got to have backdoors into everything. There probably isn't an easy answer for them to do this again. the codes now should be secure enough that even the NSA will have problems breaking them in the future, and that's what they're so worried about.
At least for the first couple of years.
Yeah. Right. Well, once they get quantum computers, it won't matter. They'll be able to break anything, and they are working on that at the moment. So it is interesting.
So beam me up, Scotty.
Well, of course, Star Trek saw everybody beam down to the surface and beam up and beam there. Not going to really happen with humans. But one of the things that was based on was a thing that Einstein called spooky action at a distance. That meant that if you took an atom and you had two particles of that atom, if you ripped them apart and moved one to the other side of the building, if you spun one to the left, the other one would spin two at the same time, and not at the speed of light, but instantaneously, literally at the exact same time.
Say that again now.
It's called spooky action at a distance.
Okay.
But any particle that's entangled with another particle. Okay, let's say two light photons around a single atom.
Right.
You move one, it moves the other, and it doesn't matter whether the other one is across the room or on the opposite side of the galaxy, the other one spins, and not at the speed of light at the same time. Right?
That's so cool, man.
It is very cool, but you always wonder, well, how is someone going to talk to me when they're 200 light years away? Well, eventually, the idea would be you take one atom, you spit off a couple of the particles, you keep them nice and cool and cold at about 240 degrees Celsius, the coldest cold that there is.
Okay, so watch this. Folks, hey, this is going to be dynamite. So check this out. If, in fact, right, that we're atoms, right?
Right.
Okay, so what happens if I get 3 or 4 more split off across the world? And you do too, right? This is this deal about...
You really can't.
Why not?
The idea is it's got to be a particle of that atom. So you could have identical particles cut off of maybe some of your atoms, but not your whole body.
Okay.
Okay, so what happens is you get an extra particle like a photon, which is just an element of light without mass, right?
Okay.
It's like a regular...
Right. No, I don't know, Dave.
Okay.
But go ahead. I like it. No, I like it. This is a great conversation.
Okay. But the idea is using this for telecommunication in the future.
Okay.
Right now, we all depend on light flying around fiber optic cables up and down the line, going into maybe a copper cable, going into your computer, maybe... RF energy, a radio signal coming to your handheld device.
Yes.
Okay. The idea would be that you could hook up and have all the speed you could ever want in the internet by having one particle here and one particle at the ISP, maybe at Comcast or Time Warner.
Sure.
Okay. A 1 would be spin it to the right, a 0 would be spin it to the left, and you'd be able to do that theoretically, at the speed of light, so you'd have an unbridled ability to send data anywhere, and it wouldn't matter if you were in the center of the Earth, it wouldn't matter if you were on the other side of the galaxy, as long as those things don't get jostled and they remain in a state where one moves and one doesn't, and it's tough. You got to keep it cold, but it'd be like having the tiniest, small, atomic-sized refrigerator in the world that made sure that thing didn't move.
And what that would mean is that when you're typing anywhere or sending any type of data, it's instantaneous then, right?
It wouldn't be at the speed of light. It would be at that exact same time. Now, what happened in Switzerland is that they've now been able to do that at a distance of about 15.5 miles, 25 kilometers, and we've seen it at various speeds and times, but each time we see one of these, it's a mile. Now it's 15 miles.
It only takes the breakthrough, right?
Right. It always takes a breakthrough, but they're doing this regularly now, and my thought is that it's the first commercial product and use of this will be being able to send all the data you want instantaneously anywhere in the world. And, of course, you don't have to worry about somebody communicating with your signal or even breaking into it. Because anybody...
they're going to your send file.
Yeah, well, they'd have to.
Yeah.
But literally, there would be no way to intercept the signal because there is a feature of quantum mechanics that says if you look at something, you change it. If you try to measure it, you change it, right?
So
everybody...
That's one of the hardest things to figure out on quantum mechanics.
Right. And the NSA loves it because you could truly have secure communications. Anybody even looked at it, the communications would break down and you would know someone was trying to tap your conversation.
Right.
So, but all those things are coming, but very interesting news this week about getting to the range of 15 miles. And as we look at quantum and photonics in the future, right now it's all about copper and silicon.
Okay.
In another 10 years, it's going to be all about photonics, and there won't be electronics.
It'll be
like
photonics.
today. It'll all be photonics about what people talk about.
Next, we're looking at the SSD drive price points. They're driving lower, right?
Right. We talked about MU a couple of weeks ago.
Micron-Tech, yeah.
Micron-Tech coming out with a new form of memory that's going to drop the prices of hard drives, SSD hard drives, in the future quite significantly. But we haven't even talked about just how far they've fallen in the last year. Right now, you're regularly seeing prices of hard drives at about 35 cents per gigabyte for an SSD. And that is just 90 cents from a year ago.
That's amazing. Actually.
So we're going to be...
business is so tough, man.
It is, but what it does tell me is that the people who are going to make money in the future of hard drives is going to be SanDisk and MU who are making the money.
Right.
It's going to be tougher for companies like Western Digital and Seagate and Toshiba that have required or wanted that spinning disk hard drive business to continue on. Now, there are a few...
I got it, okay, because the solid-state drives are coming down so dramatically, right?
Right, yeah. But at the same time, the drives keep getting bigger. In fact, an 8 terabyte drive just shipped. Now, the problem is, if you're a disk manufacturer, is that if you've got a recording head on the inside track, if you remember old LPs, right?
Yes.
You still had to pick up the needle and drag it into the center or maybe the last track.
Right.
Same thing happens, which means that the more data you put on there, the slower the data is going to come back off because those heads have to move around. As these drives get bigger and faster in the SSD world, it becomes problematic. Doesn't matter how big a hard drive you can build, because at some point, like now, it now means that all the data continues to come off slower and slower and slower. Now, some companies are making hybrid drives where if you use stuff a lot, like when you boot up the system, right, it's always using those files. Every time you use the computer, it's got to boot Windows.
Okay.
You keep those on an SS disk that's bolted to the same spinning disk, and the stuff that's used most often is on that SSD, right?
Yes.
And those are hard hybrid drives, and those are kind of finding their way in these giant data warehouses as big deals. But I think we're getting close to a tipping point for the SSD market, and it doesn't look like it's going to be good for these big guys, and it does look like it's going to be good for Micron and SanDisk.
And it's good for us, too.
Yep.
Yeah. Dave White, Tom O'Brien, you stay right there, folks. You're coming right back. The Dow finished up 208. Nasdaq up 48. At 45, the S&P's up 21. Gold's at 1191. Silver 1682. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Hope everyone's having a great day and hope they have a great TGI weekend. Apple, folks, okay, closed at 99.62. This is the first week and 8 weeks that actually closed under its highs. Well, it's already tested its highs, tested with lighter volume. What that sets up, folks, guess what? Apple's going south next week. Right now, we're looking at Dave's slide. This is the results of consumer reports from smartphone bend test.
Right. Now,
why does everyone want to bend phones, man?
The thing is, it's so big in your pocket that it doesn't have room to move with the new Plus.
Okay.
So when they put it in their back
This is
pocket,
the Apple.
Right.
The Apple 6 Plus.
Right.
Yeah.
And they sit down on it. Now, what we do know is that basically because of the way the components are in it,
Yes.
it bends fairly easily right below the volume buttons.
Okay.
And that's about 2/3 up the way of the phone. But now Consumer Reports did it. They've had now today what they're calling Hairgate, because apparently the little metal in it is grabbing women's hair. But
when they're on the phone, you mean?
When they're on the phone.
Okay.
So they've had kind of
That's
a bad,
serious. That's serious business, man.
For women it is.
Yeah. Yeah.
But what I'm saying is that there was kind of this love fest at the point where they released all of them.
Okay.
And now they're kind of maybe they're feeling that maybe the press kind of going the other way, right? They like to build people up and they like to tear them down.
Sure.
I don't think it's as big an issue as it has, but for some reason there's about 3 things that have really started to stick on Apple, where they've been kind of the Teflon company for a while.
A long time, sure.
And like you said, when I saw that we brought that up during the break, I said Apple was, did you notice it?
This is the first
we had
week.
a 25-point move. I can't remember when the S&P had a 25-point move and the Apple wasn't up a buck.
No, there's no doubt. There's no doubt.
So keep an eye on that, especially in the next couple of days. It's going to be extremely tough with them still at 12 or 13% of the NASDAQ to see any meaningful move.
Yeah.
And it was the weaker dog of the two today out there today. But I guess you could make a big deal about it. But one thing, Samsung phones build like bricks. It takes about 50% more pressure to bend one.
I'm telling you something. Forget the bending of it. If this phone is messing with women's hair when they're talking on the phone,
it's just catching on it.
Well, that's a problem.
Yeah, it is.
That's the last thing. Would you want every time you take out the phone, half your hair comes out?
Yeah.
No.
I wouldn't. I think it's probably a single hair and more painful than anything.
Yeah.
Probably not.
So we got Windows 10.
Right. Windows.
Is this out or coming out?
Well, I've got a copy of it. You can get a copy of it. It's not going to be officially released till next spring, probably April or May.
Okay.
They were going to release Windows 9, but skipped right over it. Now, there is a big reason, but I did, and anybody can go to Microsoft's website, sign up as a tester, and you give your feedback of what you think of it. But you can install it on a drive and use it for the next 200 days. But what I wanted to do, of course, since I'm interested in what's happening in the future, is what are they doing? Especially since probably 90% of our listeners, probably if they're using a PC to trade, they're using Windows.
Sure. Right.
Now, what Windows 10 is all about is this. They want a consistent interface, whether you're using any kind of device like an iPod, whether you're using a phone, whether you're using a tablet, whether you're using a convertible, which is like the laptop I have, where you can take it off and it acts like a tablet, but it's got a keyboard that'll plug into it, or a full-time desktop, or a 100-inch screen that's got Microsoft running it and you're using it for a presentation in your office.
Sure.
Their thought is that no matter what, it should know how you use it, and the experience should be the same all the way across.
That would make sense, because that's what Apple's done. I mean, you could do that with Apple, right?
No, because there's no touch interface for an Apple Mac.
Okay. Touch, you're talking. Oh, you're talking touch.
It should everything should, if you can touch it on a phone, you should be able to touch and use it on a computer.
I see.
You should be able to use it on a 100-inch screen that you're using for your presentation in front of your corporate board.
Okay.
If you understand one, the idea is you should understand all of them. Right?
That makes sense.
It does make sense. But it looks to me like they have done a fairly decent job. There are some other neat things that, if you're a real power user, I love. You've never been able to, back in the DOS days, you never were able to cut and paste in the DOS window. Well, I still have to use it occasionally. Finally, after 20 years, you're going to be able to cut and paste in the DOS window. There's some other things.
I don't even know what the DOS window is. I know what DOS is, but...
Right. It's just, remember when you open up a command prompt and it says C:?
Oh, yeah.
That's a command window.
Okay.
So, but if I had a command that I'd gotten in an email, I had to type it back in. There was no way to cut and paste it back into that window forever.
I see. Yeah, right.
So there are some little things like that. But really what they've done is, people hated in Windows 8, was that they got rid of the start menu. You had to go back and look in this long list of programs. And, of course, if you knew enough, you just you glued it to the bottom of the taskbar, so you didn't have to go looking over there in the big bin forever. Now, when it comes back, they're going to have two things together. The start menu is going to be together along with the live tiles. And so if you're using a desktop, you'll have both.
I use the tiles. I like the tiles.
The tiles are very cool.
The tiles are quick. Right.
And, of course, since they're updating all the time, if you have one laying there, even if it's not open, you may see something like stock quotes or news headlines clipping by. But look for that. Probably they decided to scrap Windows 9. They're going right to Windows 10.
It just sounds better.
They said it sounded better. They wanted to call everything. They're calling everything Microsoft One, this, One, that, OneDrive. And they wanted to call it One, but they said, of course, One was done 20 years. Windows 1 was done in 92 or whatever. So that's it. But look for that next spring. And again,
next spring. Now you're going to come out with Christmas.
They were going to come out with 9 in January. They've scrapped that. They're going to say 3 more months. We'll come out with 10.
And how do you test drive it? Do you go to the Windows
Microsoft and just type in Windows 10 Technical Preview.
And is it free?
Yeah.
Oh, that's cool.
You can install it. Now, I would advise that you use a different hard drive than the one you're using for your work.
Right.
But I have 4 computers laying around at home. I just took one of the older ones and put it on it. Seems to work fairly good. And you can use it for 200 days and that tells you probably when they think they're going to ship, right?
That's pretty cool.
Right. So it's kind of interesting. Now, Tesla. Yeah. Well, we only have a few seconds left. Don't be shorting it before October 9th because they've got new announcements coming out. Make sure that you know that...
Those cars are beautiful, man.
They are cool.
Yeah.
But they got a big announcement coming out on the 9th, so you're probably going to see them peak on that date. I think kind of like Apple when they come out with some new stuff. But
kind of like Alibaba.
Everybody's been calling me about shorting them. At least wait till the 9th.
I wouldn't be shorting Tesla. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Dave and I and the rest of TFNN look forward to speaking to you Monday. Have a great one.
Thanks, Dave.
With the launch of Tiger TV,